Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right, we are back with another episode of the Real Estate Investing Club. I hope you guys are having a great day, a great week, wherever you are and whenever you are, wherever you are. I forgot my intro. Anyways, I am feeling a little bit better. You guys are happy to hear my voice might crack a little bit, but I'm getting over the sickness that my daughter brought back. She's 2.5 years old, so every time she goes on her play date, she gets sick. She's actually there right now, so I might be getting sick again next week, but crossing fingers that doesn't happen. All right, so this is going to be a good episode today. We got Pascal Wagner with us on the show. He specializes in helping LPs and coaching LPs to be more effective as a limited partner. So if you guys are interested in investing passively in deals, not being the GP yourself, you don't want that headache, you don't want that stress, you just want to invest in real estate as an asset class, but you want somebody else to do the work, this is the episode to listen to. He also is an investor himself. He invests in that popular strategy that we've heard a few times on the show recently, rent by the room. So he has 11 homes with 94 tenants, 94 units, I guess you'd call them. And so that's the gist of it. Pascal, I'm super excited to jump into this. Thanks for hopping on.
Thanks for having me today, Gabe.
Yeah, absolutely. I told you before we got started, we always like to start with stories. We like to hear how people got to where they are. I know you got a good one. You started as a VC and then you went into the real estate world. So why don't you take us to the beginning and tell us how you got here?
Yeah. So thanks for having me on the show. So my story started when I was 23 years old. My best friend, I helped my best friend buy a home, and he was doing a strategy called house hacking, which is the story where you buy a house, live in one room, rent out the others. And I saw how profitable the model was with him. And so we started doing that strategy together. And so I started when I was 23 years old. I started buying homes in Austin, Texas, then later expanded to Charlotte, North Carolina. And eventually I sold all of that and consolidated everything in Atlanta, Georgia, where my portfolio is today. But I've scaled. I've been doing that over a decade now. I've scaled that to over 94 units. And that's where I get half of my family's income today. While all that was happening, I started a venture-backed startup, and it was called Walkthrough. It was doing VR in real estate. The VR never took off, but the scheduling platform did, and we grew that to close to $1 million in revenue and launched in 6 different cities and grew to 55 employees. And it was pretty wild ride. And after realizing that wouldn't sell or wouldn't become a $1 billion company, I sold it to one of the national photography firms in the United States in 2019, and then joined one of the venture capital firms that invested in our company. And so, while I was there in that role, I got to review thousands of startups, and then I was personally in charge of following the investment strategy that our chief investment officer set, and deployed over $150 million into more than 300 companies. And so I got a lot of experience looking at deals, how to source them, what do you look for, all of that type of that you would need at an institutional level to deploy that amount of money. At the same time, I started building a commercial real estate portfolio that earns over $100,000 a year in passive income now, all from my LP investments. It's one of my claim to fame, and I've also been able to write off over $500,000 in taxes I've done $3.3 million invested into 23 different private investments. And I would say that, while I was working at Techstars, in April 2021, my dad passed away. And so all of a sudden, he left my mom a $3.5 million portfolio. I think everyone dies. I don't know. he died suddenly. And so all of a sudden, she had no idea how to handle the finances. He was the one who did all of that for the family. And, as soon as that happened, money started eating away at the nest egg with no kind of income to replace it. And so that kind of meant one day that she would run out of cash. And so that responsibility, I don't know, I'm very good at this type of thing. I also just worked at a venture capital fund. And so the kind of responsibility of managing her finances fell on me. And so, I looked at all the different options. I talked to all the financial advisors. I looked at money markets, but they, only made, 4%. Bonds didn't provide monthly cash flow. The dividend stocks would like wipe out her games, with the volatility. And so I went into what I knew would do it, which was alternative investment. So investing with other operators. So obviously I took some of that money and put it into the co-living portfolio that I had, a way that I knew how to generate cash flow. But at some point I realized that, okay, I can't have my mom's entire retirement and future in this one city, in this one asset class, in this one strategy. A hurricane could come through and wipe out my portfolio. And so I needed to diversify. And so went to people I knew in GoBundance is a mastermind group that I'm in, where people were retired and living off of their passive investments. And, I would ask them what to do. I spent over a year kind of like researching all the different firms, flying to investor dinners, like spending an hour on the phone with over 75 different funds, just to like really understand the space. And now my family, we have like a $300K income from the properties and the passive income portfolio. And I now, as I mentioned to you earlier, I would be $1 million wealthier if I knew back then what I know now. There are so many ways to get wrecked. You don't really know what you're looking for, what questions to ask, what are you allowed to push back on, what's normal, how much transparency is normal. You don't really know any of these things. And so
sorry to clarify, you're specifically talking about investing in other people's deals, investing
in
as
other
an
people's
LP
deals.
in
Yeah.
some syndication. Yeah.
And so, basically I'm an investor, like most of my clients, but, they come onto my list and they get access to a lot of the same deal flow that I get. I have an opt-in we can talk about later, but I share the deal flow that I come across as an investor. And then a lot of those people were asking me like, hey, how do I pick between all of these deals? And so that's led to a lot of the coaching and the mentorship program that I have today.
Nice, man. Yeah. I'm really sorry to hear about your dad. That's always a difficult thing to go through, but it is good. When your mom took on the burden of managing the finances, if she doesn't know how to do it, she had you in her corner. And deciding how to implement or deploy that capital is a difficult thing. I am always, obviously a huge fan of real estate, and investing as a limited partner in a deal. Like you said, there is skill to it. There is knowledge that you have to have in order to be effective. It's not, the stock market, I was going to say, it's not like the stock market, but the stock market, you also need to be definitely very, very knowledgeable about that one. But so let's talk specifically about investing as an LP in somebody's deals. This is something that a lot of people like the idea of. Maybe they have a couple $100,000 in their bank account or in the stock market maybe, and they want to invest it in an alternative asset, but they don't want to, fix toilets. They don't want to get those calls at night with angry tenants or whatever it is. They don't want to buy real estate. They just want to be part of the process of buying real estate, which is what an LP is. And so what are the kind of top 3 things that you see people, the mistakes you see people make when they begin as an LP investor investing in other people's deals?
So if I have to pick 3, I'll probably frame the 3 around the 3 things that are the core parts of what I teach. And And the first part is strategy. Second part is deal flow. And the third part is vetting. And I find that, any investor that kind of comes through this process or, comes through my door, typically has one, if not all three issues. So when I talk about strategy, I think a lot of people, retail.
And sorry, I'm gonna jump in here. You said strategy, deal flow, vetting. You say those are issues. What is the issue associated with those?
Yeah. So I'll start with the top one. So the first one is strategy. So most retail investors that I come across have no strategy. So, if you think about an investment firm, right? I worked at an institution. I was there when they had to put together the pitch deck and basically say, here is, we're raising $150 million. Here is what our thesis is. This is how many companies we're going to deploy the capital to. And, we expect it to have this kind of return. Retail investors kind of approach it the opposite way. They're like, man, I've got 50 or 100K and, I'm looking for deals. And deals just come to them, and then they're trying to analyze the deal of like, oh, is this a good deal or not? And maybe they only have a couple. And so I think the frame is backwards, right? Like there should be like I'm typically investing for one of three things: cash flow. I'm trying to grow my equity, maybe outside of the stock market. Or I'm trying to reduce my taxable income. I'm trying to cut how much I have to pay in taxes, and I'm willing to invest to do that. Those are the three only things you can really do with an investment. And a lot of people don't have that frame. So if you're like, hey, my goal is to generate cash flow, you're looking at entirely different deals than if you're trying to reduce your taxable income. So I think that is a big frame. That kind of leads into point two, which is most LPs are just reacting to deals that come across their desk instead of applying, like building up a lot of deal flow and applying a criteria. So when I first started, these deals are incredibly difficult to find. Now you can go on to sites like Fundrise, Realty Mogul, Yield Street. There's tons of crowdfunding platforms out there, and there are a ton of private operators out there. And there are pros and cons to each one, right? Like the crowdfunding sites give you more, take more fees. But they also vet more, and there's a little bit more third-party diligence going on.
Real quick, I want to pause on that because I've heard of these. I've never used them for my own deals, and I don't really know anybody who has. What is for those sites like Yield Street, Realty Mogul? So I'm the GP. Do I go in and I have this deal that I have under contract and I'm going to raise money for? And I just put the PPM out there and say, hey, this is what I'm raising. And how does that work? How do those sites work?
Yeah, so they are just like any kind of other capital raising firm or syndicator or person that you might find online. They're a dime a dozen nowadays. Yeah. But yeah, it's basically like they're looking for deals. So if you submit a deal to them, they have their own underwriting process and team. And they are underwriting your deal, the opportunity, the operator, yada, yada, yada. And only a small percentage of all the opportunities they take onto their platform. And so now the average Joe who, is not an accredited investor can go on and invest $100 minimum with Fundrise or $5,000 minimum with Yield Street into a given project.
Okay.
That's how it works.
Okay. Yeah, that makes sense. Sorry, I jumped in there. Keep going.
Yeah. So the second point I was getting to is like deal flow. Typically when you start, you get very few deals in your inbox a month. I get hundreds of deals in my inbox because we have a system now where we go to all these crowdfunding sites and pull all the deals in. We go click on every ad. We join every operator's list, And so now whenever a deal comes out, they come into our database. And so, what I'm doing is I'm saying, okay, I'm only interested in investing in funds, and I'm only interested in investing in things that have audited financials or whatever your criteria is. But how do the best institutional investors play the game? They find and look at all the deals out there and invest in the best ones. That's exactly what the GP you're probably giving money to does too. They look at a lot of deals and pick one. But a typical retail investor is not looking at 500 deals and picking the best operator to place their money with, because that takes a lot of effort and time. And so when they only have a couple, deals in their inbox, or, they only know one or two operators, those are typically the only deals they do. So I think that's point two. And then point three is into vetting. So most people ask themselves, how do I vet this deal? This deal seems good, but I don't really know, like, if it's a good deal. Can I trust them? Like, what do I not know? And the issue is everyone wants to start there, but typically like 90+% of the deals, if you follow the structure of focusing, what is your strategy? How do I get a bunch of deal flow and find the best ones? And that will automatically sort away 90%. And then the last part is double checking and asking a bunch of questions to verify the deal. And so, look, I can clearly talk for hours on this. I'm passionate about this topic, but I would say those are the three biggest kind of issues or problems I see that is plaguing new LPs to the space.
Got it. Okay. And so to just quickly summarize, the three things that if somebody wants to be an LP, they want to invest their money passively in somebody else's deal. What they need to do is first choose their goal, their strategy. Are they going for cash flow? Are they going for, tax depreciation, mobile home parks, RV parks, that kind of stuff? And then they need to figure out how to build a pipeline. So they need to be reaching out to as many GPs as they can. They need to be connecting on all these sites that you mentioned, Realty Mogul, Yield Street, et cetera. And they need to start building that pipeline. And then the third thing that you mentioned, it sounded like underwriting. They need to understand how to underwrite a deal. And so I'm assuming that in this strategy, you are telling people to select a specific type of asset. Is that accurate? Because if you're telling to learn how to underwrite, each different asset class has a different way of underwriting, you have to learn each individual underwriting model. Are you telling them to learn each underwriting model for each asset that they are investing in, or just choose one asset and go for broke, essentially?
So I guess the way that I frame it is like, I'm not telling anyone to do anything. Everyone has their own thesis or strategy or whatever it is. But I think I am helping people walk through the process that I've learned now how to do at an institutional level, which is like, so you mentioned, reducing your tax. So like, there's a difference between, are you trying to reduce your active income, or are you trying to get additional real estate depreciation? Because, most LPs, or at least, those who are in W-2s, are more focused on reducing their active income. And so that's there's only like two types of deals. There's like oil and gas. You can do that, and you can do opportunity zones. And
oh, really? I didn't know that was the case. Those are the only two that reduce.
Those are the only two, unless, which is a very rare case where, like, if you're a high-paying doctor and you have a spouse that's a teacher and they become a real estate professional, and then you can write off, all the real estate depreciation against the doctor's active income. Like, those are very rare, unique circumstances, but generally those are the only two. Otherwise, all real estate depreciation can only offset other passive income or other real estate type of income.
Got it. Okay. And so that's what you're talking about when you mentioned the strategy.
Yeah. I mean, most people just don't know what they don't know. Right. And so I think the thought is whenever I'm trying to do something new, how do I find people who've already had success in what I'm trying to do and like get them to tell me everything, you know?
Right.
And I think that's the approach I'm trying to take.
Yeah, makes sense. I mean, I got started as a GP that I was doing my own deals, and I have never invested as a limited partner, but I wish I had, because you learn a lot. I mean, if your ultimate goal is to be a GP, you want to be running your own deals. Investing in somebody passively and watching them run the deal has a huge impact. So I kind of wish, when I got started, I didn't have the money, so I couldn't have done it. But I wish I would have had that experience at the very beginning and had the opportunity to invest in somebody's deal as an LP. So I got to watch them run the deal, send out the communications, all that stuff, and see how a professional goes about executing a deal. So right on, man. Well, hey, I just took a peek at the clock. It looks like we have run it down. It looks it's time to jump into the quick question round. Are you ready?
Let's do it.
Let's do it. Starts with education. Could be any form, could be a book you've read, a movie you've seen, a conference you've gone to, mentorship program you've been a part of. I just need 2 recommendations, one for general life wisdom and then one for real estate.
Man, I feel like GoBundance has been a huge impact in my life. I've been in GoBundance for a decade. And then
multiple people have mentioned GoBundance. I've actually been looking for a good mentor, or not mentorship, but a group setting with other people who are entrepreneurs and doing that stuff. And I've heard a lot of good things about GoBundance. So you highly recommend it, it sounds like. Yeah,
I've been in it for a decade. I started as a volunteer when I was 24 years old, and all I wanted to do was be surrounded by these, what I think the goal is to become a whole life millionaire and not just like wealthy, right? And I think that's what's really cool. I think it was a group that spawned naturally out of people who had high expectations and accountability.
Nice, I like it.
Yeah. Second book, hard to say, Atomic Habits. I love. Maybe it's not a real estate one. If I had to pick a real estate one, maybe the classic Rich Dad Poor Dad.
That's a good fallback. Atomic Habits is good, though. I did read that one. I always like books that are about, making the small improvements every day. All right, next question is for your younger self. Let's go back to the Pascal who was just getting started so many years ago. He was still at that VC. Go back to him, look him in the eye, give him one piece of advice moving forward.
Oh, man. Invest more in crypto.
We all wish that. I actually, this is a side story, but my cousin and I, when crypto was first a thing, we started mining Ethereum, and we got quite a few Ethereum mined. And then my cousin lost the password for the computer or the hash to open the wallet. And it's been stuck in perpetuity. So
we also did mining. I started mining. I bought 70 GPUs, like $60,000 worth.
Yeah, we did that same.
And we mined over 100. It got me a great start into crypto.
Yeah. It was funny because I was like 20 at the time or something like that, and we were doing it at my cousin's. He was living with his parents still at the time, and so we were doing it at their house. We were running these GPUs, and their electric bill went up like hundreds of dollars, and they got so mad. Anyways, good times. All right, next question is about the U.S. It's a big place, a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
I don't think I have a good insight into that. I think how I've been investing, and I think something that's been important to think about as an LP investing into these deals is that, like, I have a portfolio of properties in Atlanta, and it only makes sense for me to continue expanding in Atlanta. I know the market. I have 11 other properties there. I already have a maintenance team, and it's like, and so adding another property there is significantly easier. And so, I think a GP will probably almost always tell you like their market. And I think that for them, their best opportunity is in that market, but maybe as an LP, there might be better ones.
Yeah. Why'd you choose Atlanta, by the way?
So when I worked
Do
at
you live in
Techstars,
Atlanta? I should have asked you.
yep. When
Oh,
I
you
worked
do.
at Techstars, I mentioned I was like the fund manager. So deals came across my desk every day, and it was the first time that a like marketplace or platform like Airbnb existed for the house hacking or co-living that I did, Pad Split, and their headquarters was in Atlanta, and so I personally invested in one of the venture capital rounds when I was at Techstars, so I put their money in and my money in, and then I was like, I've been doing it for 6 years, I might as well go all in. And I had a lot of it's like when the founders and you get to see their board decks and you like really understand what's happening inside the company, it felt like a great strategic bet to make.
Stick with what you know. I like that. All right. Next question is about finding deals. It all starts with getting in contact with the seller and penning that purchase agreement. We're going to switch this around to say it all starts with getting in contact with the GP and seeing their deal flow. So what is your favorite way to generate leads and find new deals?
I will give you my best hack, which is just start going into Google and just start typing in like whatever your asset classes that you're interested in, whether it's like oil and gas general partners, oil and gas investments, oil and gas funds, and go and click on like 5 different links. And then that will start the ads across all of your platforms. And
nice.
So every time a new ad comes up, opt in, and you'll start getting the emails. One, you'll learn about the operator and the asset class, and you'll start to see very like differences between how all of them communicate, how professional they are, how much they have their stuff together, and then you'll also continue to get a lot more ads over the next 2 or 3 weeks. And so that's, I think, one of the best ways to build your pipeline.
That's a smart strategy, is using the pixels and the little Google analytic tags that are on all our phones, grabbing, clicking on links that seem interesting just so that you start to tell Google and Facebook that this is what you want to see, and then clicking on all the ads. I like it. All right. Next question is about lessons learned. Not every deal we get into goes the way we expect it. In fact, pretty much every time something is going to go wrong, and that's when we get to learn a lesson. So what was a deal that went a little bit sideways for you? And then what was the lesson you pulled from it?
I think I did invest in a deal that turned out to be a Ponzi scheme. And I lost 40 grand. So, not like basically half of my investment. And, after meeting with a ton of different people, I don't think we could have done more due diligence. It was a huge fund. There were audited financials. Personally, people I know personally went and visited locations. There were big, billion-dollar banks that underwrote the deal. And I think sometimes these deals, had been around, had gone full cycle on 10 different funds. And I think when economic tides, there are some people who maybe start out trying to do a Ponzi. I think often what happens is deals turn into Ponzi's. People get over their skis somehow. And I think it can happen both private and publicly. Enron, it doesn't mean like private equity is like less safe. I mean, it happens in public companies. But I think it was just like, it's the diversification that you make money with making concentrated bets, and you save your money or by being more diversified. Protect your money. So that's
a hard one. It would be difficult to have 100% accuracy in identifying what would be a Ponzi scheme, because you see all the things that are out there. And you were like, "Wow, how could somebody possibly not know that was a Ponzi?" But at the time, I'm sure they did their due diligence, and it's checked out.
I mean, a lot of people don't do due diligence, right? But
yeah,
just
enough.
like a lot of people limp into a stock, and then there are companies that have 10 analysts looking at a stock. There's like a wide range of what diligence is. But I just think it was a great reminder that you are not going to bat 1,000.
Right.
You're going to lose money investing, and I think that's part of it. And so if you know that, how do you change your decisions or your deployment?
Yeah. That's a good way to look at it. A healthy way to look at it. All right. Next question is about highlights. We just talked about lessons learned. Things do go wrong. You get hit in the face, but sometimes things go right. And it's a deal that kind of sticks out in your mind as one of your favorites. So harken back to your favorite deal. How did it go and what was it?
So I have, I kind of think of this in 3 different buckets. I've got my real estate bucket, which is my, normal cash flow, what I'm trying to support myself on. And then I have kind of like the equity side of the house. I think where you make real wealth is through these kind of big equity exits. And so I've had 3. One was I went in on Tesla like 10 years ago.
Nice.
And that 15x from 100 to 1.5 million.
Nice.
I had I've had crypto multiply. I started mining in 2017, and I have definitely more than $1 million in different cryptos. And then when COVID happened, I'm always trying to invest when other people are fearful. And COVID was a time when stocks crashed, and I bought some of the cruise stocks, Royal Caribbean.
Oh, I did the same thing. Yeah. I bought some Royal Caribbean. I also took a cruise on Royal Caribbean during that time, and both went very well. So
That's awesome. Yeah. So Royal Caribbean crushed. And some of my best ones.
Yeah. I did that same thing. I was looking at the ticker for Royal Caribbean, and I was like, no way is this the actual value of this company. It's like it just tanked during COVID. But all right, that moves us on to the second to last question. This one's about AI. It is a big topic these days, and everybody who's on YouTube, you're going to lose my video feed here in a second because my camera, we got a new one, and it's just sucking the battery down. And we've been talking so long that the battery's going to die. So you're just going to hear my voice for a second, but that's okay. This question is about AI. I'm a huge proponent of implementing it as many places as you can in your business. So what is a way that you feel is unique that you're using AI in your business?
I do it for a lot of guidance, financial decisions, thinking partner, strategic coach, helping me write copy. It does help me like flesh out my thoughts, help me brainstorm. I primarily use it in that way.
Yeah, absolutely. Do you have a specific, do you use like Perplexity? Do you use Chat?
I'm like ChatGPT. I'm trying to move over to Grok because I think anything Elon touches is gold. Yeah. But those are the ones I use.
Yeah, absolutely. Looks like we did just lose that, so we can see. That's okay.
You get to see my face.
Yeah, there you go. All right, and that does lead us to the very last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a 2-parter. Where can they find you, and then what can they expect when they reach out?
Yep. So you can find me on LinkedIn or YouTube. I have a freebie where, so I mentioned I'm an LP first. I'm looking at all these deals. I'm clicking on the ads. I'm going on all these sites and aggregating them all into a database. And I give the top 3 newest deals every Friday to everyone who's on my email list. So if you are interested in getting cash flowing deal flow, like these commercial real estate opportunities, maybe Gabe will send us his next deal and we'll get his deal in that database. But if you want that is at passiveinvestingstarterkit.com.
Perfect. I will put that link in the show notes. So if y'all want to reach out to Pascal, all you got to do is click the little more in the description. It's going to pull down that full description, and in there you can find his link. All right, man. That wraps it up. Thank you very much for hopping on the show.
Yeah, thanks for having me, man.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you guys want to support the show, just leave us a review. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.